Welcome to the debate. Our discussion today, well, it really emerges from the strategic insights in Chapter 2 of the Contractor Playbook from Boss Up Solutions. We're specifically looking at material authored by Latif, and it zeroes in on a really crucial point for anyone in roofing and restoration, which is that the insurance claims process is just fundamentally different from standard construction. Insurers are businesses, and they are, structurally incentivized to minimize what they pay out.
That foundational understanding is everything. It really is. If a contractor walks into this thinking it's just a standard bid process, they have already lost. You have to recognize this is a contractual system designed for cost control and efficiency, but that efficiency often just means being conservative right at the start.
Exactly. And that right there leads us to our core strategic question about claims supplementing. The material makes a very strong case for the difference in roles between the field adjuster, the FA, and the desk adjuster, or DA. So we're debating where the primary strategic effort should go. Does successful supplementing hinge entirely on targeting the DA, who has the final say, or does that strategy maybe minimize the critical, lasting financial influence of the FA's initial, and let's be honest, often conservative assessment?
I think that initial conservative estimate, whether it's intentional or not, it casts a much longer shadow over the whole claim than a pure focus on DA efficiency really allows for.
Well, I'm going to hold that the optimal results, and by that I mean fast, full-scope approval and payment, are achieved by prioritizing the DA as the sole targeted recipient of all your documentation. The system is just set up to reward that focus.
And I'm going to challenge that focus. Because oversimplifying this adjuster dynamic, I think it risks some pretty serious strategic missteps. That lowball estimate the FA writes becomes the financial baseline that the DA then has to manage, and, frankly, that you have to fight to overcome.
Okay, but let's look at the functional reality here. A field adjuster's job it's brief, 30, maybe 45 minutes max. Their role is to verify coverage and write a ballpark estimate just to get the claim moving. Once that claim is approved, their immediate job is basically done. The functional authority shifts entirely over to the desk adjuster. The DA is the one who reviews all the documentation, verifies the codes, and crucially, approves the supplement and cuts the check. But that ballpark estimate is precisely the problem.
The DA is the target because they are overworked, they're managing maybe 100 or even more claims at the same time, and their incentive is to close them quickly. So the contractor's role shouldn't be adversarial. It's to facilitate the DA's speed and efficiency. By submitting supplements in, one single email with irrefutable documentation, specific code citations, clean manufacturer specs, verifiable exactimate pricing, you make approval the path of least resistance. This systemic efficiency is what leads to those 72 to 96-hour payment approvals that Latif details.
I see why you think that, I do. But the premise that the field adjuster's influence just vanishes after that first inspection is, well, I think it's flawed. That initial estimate is often what Latif calls Tactic 2, the lowball estimate. That number, that conservative number, sets the financial reserve and the scope that the desk adjuster must either stick to or, justify deviating from. So if the FA only does a quick ground inspection and misses fundamental requirements like a necessary drip edge or ice and water shield code compliance, your documentation isn't just justifying a supplement, it's forcing the DA to correct fundamental errors and omissions that were made by their own colleague.
But that correction is exactly what the DA is authorized to manage, and we are giving them the ammunition they need to do it.
Yeah, but that need for correction changes the DA's motivation. Desk adjusters are not purely payment facilitators. They're gatekeepers who have to answer to their supervisors. That's key question 4 in the material. So when a supplement is correcting a huge glaring deficiency from the FA's initial low scope, the DA might naturally fall back on Tactic 3, the denying first, approving second approach. And that requires the contractor to stand firm and push back professionally, a process that, directly contradicts that path of least resistance you're prioritizing.
I would argue that even when you're correcting errors, the path to payment still runs solely through the desk adjuster. If we accept the premise that the insurer must pay legitimate covered costs, then our strategy is about making sure the DA has what they need to fulfill that contractual obligation. while also satisfying their own internal audit rules. When we cite specific codes like IRC 905.2.85 for drip edge, we're literally handing the DA the justification. We are enabling the payment by removing their need to gas or go research the requirement themselves. This is about enabling, not necessarily fighting.
That's an interesting way to frame it, though. I'd put it differently. The persistent need for this constant, intensive justification. It arises specifically because the field adjuster routinely fails to write a comprehensive scope. The initial estimate is almost designed to minimize the payout. So the contractor isn't just streamlining the DA's process. They are fundamentally recovering money the insurance company tried to keep in the first place. I mean, if documentation was just an easy justification, why is denying first a recognized standard practice tactic 3? The DA is structurally positioned to resist, regardless of how neatly you package your paperwork.
Tactic 3 is just a safety blanket for the adjuster, and our documentation is designed to counter that safety blanket instantly. But let's talk about a crucial point: cost. If we accept the DA is the target, how do we make sure our pricing sticks? We all know that using Xactimate is crucial because it helps the DA quickly verify that the cost is reasonable. That's question 3. So our strategy has to frame supplement costs within this accepted system, justifying critical business elements like overhead and profit, O&P, that essential 20% margin you need when multiple trades are involved. The DA accepts this because it's a verifiable pricing within their own internal structure.
I'm sorry, but I just don't buy that easy acceptance of O&P. We've all seen it. That moment where you submit O&P and you just know you're going to get pushback. Why? Because the DA is structurally inclined to question every single line item that adds significant margin. And beyond that, Xactimate isn't a monolith. Its own data shows huge price variance in certain markets. So focusing only on making the DA's job easy might inadvertently lead contractors to accept pricing closer to the published median rather than adjusting for their actual higher and legitimate costs. You risk leaving money on the table just for the sake of a fast approval.
But the strategic action has to be to bypass that inherent resistance by offering irrefutable, system-friendly evidence directly to the person with the functional authority to change the numbers. The strategy laid out here addresses those low-ball initial estimates. Tactic 2, by simply moving past the FA's inadequate scope and dealing directly with the DA. The crucial takeaway for any contractor is avoiding that mistake of sending the vital supplement package to the FA, who just doesn't have the authority anymore.
I just come at it from a different way. If the DA is using Tactic 3, the contractor has to be ready for conflict, not just cooperation. And look, we can't forget Tactic 5, slow payment processing. If the company is actively delaying payments, a strategy focused purely on convenience for the desk adjuster completely overlooks the structural antagonism in the insurer's business model. You can get the scope approved quickly, sure, but the claims department can still bottleneck that payment for 60 or 90 days, which forces the contractor to constantly follow up and enforce state prompt payment laws. The fight for payment extends far beyond the DA's approval.
That's a separate, but I'll grant you, an entirely valid structural challenge. Our focus today is on securing the scope and the necessary cost approval. The material provides a clear, actionable system. The field adjuster verifies coverage, and the desk adjuster approves the dollars. So effective contractors focus their finite effort and resources on giving the DA all the necessary documentation, photos, codes, verified Xactimate line items, to remove every single barrier to scope approval. That targeted efficiency is how we secure legitimate costs within the framework they've set up.
And I'd say that while understanding that fated distinction is essential for any professional in this field, relying on it as the central pillar of your strategy risks seriously underestimating the FIS's foundational role in setting that conservative estimate to begin with, and the DA's structural incentives to push back, which is enforced by their supervisors. A successful strategy requires recognizing the complexity of this insurance game and preparing not just to easily justify costs, but to professionally fight for corrections rooted in policy and code, especially when you're facing systemic tactics like denying first.
we've covered some crucial strategic ground today, really drilling down into the different adjuster roles and the key tactics discussed by Latif in Boss Up Solutions.
Yeah, and this deep dive into Chapter 2 is part of a larger series that's designed to educate roofing and restoration professionals on navigating the whole claims process. We really encourage you to join us next time as we continue breaking down this essential material.